Bitcoin edges near 118K, ETF surges, Fed rate cuts loom, but market risks cast shadows. Bitcoin is navigating a crucial juncture, settling around 118,230, after a recent all-time high near 124,533 earlier this week. Despite this impressive peak, the cryptocurrency is now trading in a tight range between roughly 117,279 and 118,445. Price compression like this often signals an impending breakout, which could lead to significant moves in either direction, so this phase is critical to watch. When we look at the charts, Bitcoin's daily price candles reveal a solid defense around the $117,000 to $118,000 zone. Buyers have consistently stepped up to prevent the price from slipping below this threshold. Should Bitcoin fall beneath this support, the next safety nets lie around $116,500, and then further down near $111,919. On the flip side, resistance sits tightly between $119,000 and $119,500. Surmounting this barrier could open the gates for Bitcoin to rally toward targets as high as $121,000 to $122,500. Momentum indicators tell a mixed story. The Relative Strength Index, RSI, is sitting near 53, which reflects a neutral stance, neither overbought nor oversold. However, the Moving Average Convergence Divergence, MACD, is leaning bearish, signaling potential short-term weakness. But there's a catch. The exponential moving averages, EMAs, from 20 to 200 days maintain a bullish alignment, and the longer-term simple moving averages, SMAs, reinforce structural support well above $100,000. This suggests that despite some wavering momentum, the overall upward trend remains firmly intact. A major factor fueling Bitcoin's current strength is growing institutional interest, especially driven by spot Bitcoin ETFs. These investment vehicles have seen assets soar past $158 billion, closing the gap with gold ETFs, which hold about $198 billion. Multiple billion-dollar inflow days just last week highlight an insatiable thirst from pension funds, sovereign wealth funds, and insurance companies. This institutional demand has become the backbone of Bitcoin's rally, effectively cushioning it against the ups and downs of macroeconomic volatility, even as retail trading activity ebbs. Stepping back to the bigger picture, macroeconomic and political developments are reinforcing Bitcoin's positive outlook. Market participants are pricing in a 92.5% chance that the Federal Reserve will cut interest rates in September, followed by a likely second cut in October. Additionally, global liquidity is at unprecedented highs, with the M2 money supply soaring to $55.5 trillion. Plenty of capital chasing higher-risk assets like cryptocurrencies. Washington is also moving toward clearer regulation. For example, the Genius Act aims to establish a solid legal framework for stablecoins, which could unlock more opportunities for institutional investors. Bitcoin itself has enjoyed a near 80% surge since Donald Trump's election victory, although regulatory concerns linger, especially given the rise of Trump-linked ventures like World Liberty Financial's USD1 stablecoin. These developments highlight the complex intersection between politics, policy, and crypto markets. Meanwhile, Bitcoin's dominance in the cryptocurrency market is gradually declining, from 65% in May to around 57.6%. This shift shows capital flowing into several key altcoins, a trend that deserves attention. Ethereum, ETH, is priced at $4,556, up 3.14%. Aiming to retest its 2021 highs near $4,800. Solana is approaching the $200 resistance at $193.84, gaining 2.54%. Dogecoin, popular among retail traders, rose 2.41% to 23 cents. XRP remains steady at $3.12, despite lower trading volume. Render, these market-leading AI-themed tokens climbed 3.20 to $4.04. Pepe, driven by meme hype, moved up 2.30% to a fractional 0.000111. Together, altcoins have increased in value by 50% since July, pushing their total market cap beyond $1.4 trillion. A dramatic 300% spike in Ethereum's trading volume this month was notably flagged by Coinbase Institutional as a potential harbinger of a fresh altcoin season, a phase where investors favor alternative coins over Bitcoin. But it's not all smooth sailing. On August 14th, a sharper-than-expected Producer Price Index (PPI) report triggered massive liquidations totaling $261 million across the crypto marketplace. Ethereum suffered the worst blow with $115 million in liquidations, while Bitcoin saw $29 million wiped out. Compounding the pressure, ETH validator exit queues swelled to nearly 898,000 ETH, adding downward stress on the price. This incident reveals a hidden structural fragility in crypto. The interplay of high leverage and automated margin calls can spark sudden cascades, shaking market confidence even during bullish cycles. Forecasts among leading investors vary widely, which adds fuel to the debate about Bitcoin's future trajectory. Some expect explosive growth, others caution about risks. Stephen McClurg of Canary Capital foresees Bitcoin reaching between $140,000 and $150,000 this year before macroeconomic factors impose limits. Michael Saylor from MicroStrategy envisions a long-term goal of $1 million per Bitcoin, framing BTC as a binary asset. It will either implode to zero or skyrocket exponentially. Robert Kiyosaki calls Bitcoin the people's money, projecting it could someday hit $1 million as faith in traditional fiat currencies erodes. Conversely, Mike Novogratz of Galaxy Digital warns that a $1 million Bitcoin by 2026 might signify deep economic turmoil rather than prosperity. So what's the play for investors now? Bitcoin's position near $118,000 is a critical decision point. The surge in ETF investments, abundant liquidity, and favorable policy trends present a bullish case. Yet, mixed technical indicators, shrinking volumes, and volatility-driven liquidations hint at underlying fragility. Here's a quick breakdown. On the upside, breaking above $120,400 could clear the way for a push toward $127,000 to $131,000. On the downside, losing support at $117,000 risks a drop toward $112,000 to $115,000. Ultimately, for long-term holders, Bitcoin appears to be a hold-to-buy opportunity, bolstered by continued institutional inflows and macro liquidity. But traders with shorter timeframes should stay cautious, setting stop losses near $116,700 to guard against sudden downturns. The path remains open for a significant rally if resistance levels give way, but the balance of risk and reward is delicate. And here's the part most people miss. While everyone is watching the price charts and ETF flows, the real tug-of-war might be happening in the shadows of regulation and macro policy, which could either propel Bitcoin into a new stratosphere or ground it in unexpected ways. What do you think? Are we on the brink of a historic